Today we're going to talk about the reality of price action trading, and this is a very, very special video, and this could be really the most important trading video you will watch. So I know enough with that, and without further ado, let's get into today's charts and today's video. So in theory, we want to find trades that just work. We get into our trades and then they just take off. They go in one straight line to our target, right? That's the ideal scenario. We want to get there, but, and there's a huge but, the reality of trading looks very, very differently, as we will see. And why do you struggle with your trades? There are usually 4 big and common issues that keep traders from realizing the results that they are after. And this is often due to a wrong idea about price action or just general issues. So the first one is that, let's assume you get into a trade, you trade a breakout, and then the price immediately goes against you. And maybe the price turns around and goes to your target, but who has really here the nerves to hold a trade when right after your entry the price goes against you? What are we going to do about that? Second problem, you may get into your breakout trade. You may believe that the market is going to go your way, but then for dozens and dozens of candles, nothing happens. You get out of your trade, and then just shortly after you see that the price would have reached your target. Number 3, a big problem is that you may have a trade and it goes in your way, but you can see there's a lot of back and forth. And when you look at your account P&L, you will see your ticks and profits go up and down. You will see a lot of fluctuation in your unrealized profits. And again, who has the nerves to really hold on to such a trade for that long and be not influenced by all of those P&L ups and downs? And of course, sometimes we get into a trade, everything looks great, and it just doesn't work out, and you are faced with a loss. So what do we do about that? And why is that so? And I think one of the big problems is that trading textbooks, websites, videos in general often create a sense or a wrong sense of what price action and charts and trading should look like. And there's a huge gap between the expectations a trader has and the reality of how the charts then really behave. And by the way, if you want to learn a little bit more about my strategies, how I trade, see my trades, then I have a special for you right now. So I put 4 trading courses into one package, and you can get 4 trading courses for the price of one. There's a price action course, a supply and demand course, a multi-time frame trend following course, and also a Forex as a beginner course. And on top of that, there's a huge price action bundle as well. So make sure to check the link in the description, or if you want to have a little bit more of a hands-on Forex mentoring approach, we also have a Forex mentoring group. Check the link for that in the video description as well. We hold up to 6 live webinars every week. We have a live chat room. We share what we trade and how we trade it, and we also review your trades and provide detailed personalized feedback. All right, so the expectation and the reality gap is a huge problem. When you look at a Forex book or any trading website, you usually see very nice charts. Everything looks so smooth. You are looking, for example, at a continuation trade. The market is in an uptrend and does a nice flag, and then you just have to wait for the breakout and all is good. But in reality, often the price action charts look very different. And I have tips later on in this video on how to actually conquer that. But what in reality often happens is that you're in a trade or in a trend, then there's a lot of volatility, the boundaries are not as nicely respected as we see it in the textbooks, and then it is very hard to capture such a move. Or classic example, you're waiting for a breakout out of a head and shoulders. In your textbook, everything looks great, but then in reality, after the breakout, the price falls back, it goes in your favor, it comes back, goes for your stop loss, and then eventually turns around to your target. Or another example, you can see that very ugly pattern here, nothing lines up, but in the end, your trade idea would have worked out, but you probably didn't make any money. Or classic, you are waiting for a pullback approach. Maybe the retest is very dirty, or there's no retest at all, and there's just no way to get into such trades. And although your analysis is right, and although your analysis seems to be correct, you are not making any money, or you may be even losing money because the trade and the price action is just very hard to trade. Or you want to trade a very nice range, everything looks great and it's so easy, you just wait for the price to get to the boundaries and then you trade it away from that. But in reality, things look very different. It's messy, there's volatility, there are fake outs, fake breakouts, big spikes, and in the end, such a pattern is very hard to trade and you're just left wondering, where did I go wrong? And even though your analysis seemed to be right, kind of, it's very hard to profit from that. And there's a way out. And I put together 6 key trading principles on how to make sure that your price action trading can deal with all of the different situations. So let's go through all of those 6 points and let's see how to improve your price action. First one, the principle of the left side. This is so important and I keep referring to this in YouTube lives or in our mentoring group. So as traders, we only have the knowledge of what has already happened. This is very important. We only know what has happened. We don't know what will happen, but we have to make the assumption that what has happened on the left is going to repeat to some degree, not 100% in the same way on the right-hand side. And this is a very, very important principle. One of the most important principles when it comes to chart selection for sure. And it means, and what I do in my trading is I follow around 30, 40 Forex pairs, and every day I go through the list and I screen out Forex pairs that have very bad price action, and by bad I mean lots of volatility, not a clean trend structure, a lot of fake outs, fake breakouts, not a nice trending market, and I discard them. And I will only keep the ones for the day that have a nice trending structure. Of course, that's not a guarantee that the nice trending structure will also repeat today or the next few days, but it is the only thing we have as traders. And for example, here we're looking at a very nice trending chart on the left-hand side. Then we are able to define a nice pattern, and the breakout and the retest follow very good principles. They're not too deep. The technicals are still respected after the breakout on the retest, and that is what you want to see. On the other hand, here we are looking at a left chart with a very bad price action structure. So although we can see a trend, the price is making lower lows and lower highs, it's very volatile. There's a lot of back and forth. You can see that there's a lot of spikes, a lot of fake outs, even big correction waves. And then on the right hand side, even though we have some kind of pattern here, you can see this still is also repeated, and you can see there's a lot of volatility. Even after the breakout, the market doesn't take off. You have a very dirty retest, and it's very hard to trade such markets. So the most important principle to just get started in your day of a day trader or of a swing trader, make sure that you only trade charts that look nice on the left, and then you can assume with some degree of accuracy, not 100%, that this is likely to repeat also today. I love this quote. Moritz said it when we did a trading workshop, the difference between a perfect system and a good system. And most traders take a good trading system and then destroy it by trying to turn it into a perfect one. This is so important. People can trade a system easily with a 60% win rate. I think that is very reasonable to achieve. However, 60% win rate isn't enough for most traders. They want 80, 90. Ideally, they don't want to have any losing trades. And although they could make money with a 60% win rate system, that's quite easy with a good reward to risk ratio, they destroy it and they don't reach profitability because they're just trying to avoid losing trades at all costs. They're always trying to improve it, to add things, to change rules, and you will never achieve any degree of consistency if you're in that mindset. So instead of trying to obsess about the win rate and avoid losing, there are many, many other things that you can do, and we're going to take a look at it now. One of the most important principles is that get out when it doesn't work. So you may have a great trade, everything lines up, the principle of the left side is there, the chart looks amazing, the breakout is there, your trade follows all the rules. You couldn't have asked for a better trade, but it just doesn't work out. The market doesn't go your favor, it immediately fails, or it goes a little bit and then it fails. And the difference between the professional trader and an amateur trader is that the professional will just recognize that nothing works 100% of the time, and you will not know in advance which trades will work and which trades will fail. But the professional acknowledges that That's the case in trading, and that's the reality of trading. So you need to be able to cut the trade when it doesn't work out, and then you have enough money that you can then capitalize on the winning trades. The problems that amateur traders have is that they lose so much money on the trades that they should have avoided or cut the loss, that even when the good trade comes around, they will not be able to catch up, and they are forced to take more risk and trade more, and this is a huge problem. And again, what is really matters in trading, I've talked about this so many times, and amateur traders have this pyramid and they flip it around and they look at it exactly in the wrong way. Amateur traders believe that entries are the most important thing, but there have been many studies that show that trade entries are not important. And there's even some studies and some experiments where people take a random entry with a coin flip and they end up making money because they have a good approach of letting winning trades run and cutting losing trades. Those are by far more important than entries. How you determine and how you manage your exits, that's obviously determining how much money you make, how much money you lose. Entries are kind of important, but everything that comes after the entry, that's really where it gets really important, and that's where the difference comes from. And of course, making sure that you can follow your rules. It doesn't matter if you have the best system, the best entries, the best exits, the best stops, the best targets, everything is amazing, but you are the weakest link in your trading endeavor, you are the weakest link in your trading platform, in your trading business rather. You just can't follow the rules. You just keep breaking the rules. So even if you get the best system from the best trader that has ever lived out there, if you are not able to follow the rules, if you're not disciplined, if you get emotional, then nothing matters. So this pyramid needs to be flipped around, and you need to look at it in this way. You follow your rules, that's the most important thing. You work on your discipline in the first 6, 12, 18 months of being a trader. Nothing else matters. No matter how much money you make or lose, follow your rules and then the rest will take care. Then you work on cutting your losing trades. Don't let losses get out of hand. Make sure that when the price is reaching your stop loss, you get out, you don't delay it, you then add to a losing trade. Then you can let winners run, or you can work on letting winners run. You make sure that you don't cut your winners too short, and then you get into entry tweaking. That's how you should be done. And very important, pay attention to what actually really happens in reality. Become your setup specialist. And this is so important. I can't stress this enough, and it ties in what we've done in the beginning of this video. We all know about the theory of price action, the theory of chart patterns, on how good trades should look like. But again, there's a huge gap between reality and expectations. So what this means is that when a trader comes to our mentoring, for example, we give them a few setups that they can trade, and we really encourage them to trade one setup at a time and really become the specialist. You know the ideal setup. How does the perfect setup, the perfect trade look like? But then also look at the variations. What are the different variations, and what are the different situations? What are the different nuances of your setup? And then you can really get to know, because if you've only been exposed to this and everything looks great, it's easy to get in, it's easy to spot, the price will just go from your entry to your target in one straight line, that's gonna be a very hard awakening, and a rude awakening for you as a trader once you realize that the reality of price action is way more messy. So I would really encourage you to really focus on one setup at a time, and then try to learn all the different nuances. I have on my computer thousands and thousands of trade screenshots and chart screenshots about variations, and I really study every little detail about a specific pattern. If I want to trade, for example, a head and shoulders, I study everything that there is about a head and shoulders. What are the differences in how the left shoulder manifests? What are the differences in how a head manifests? What are the differences in how necklines can look like, and how does the price behave around the neckline? What are the differences around the breakout? What happens after a breakout? Is it likely that the market often falls back? How often do we get a clean retest? How often does the market just take off? How often do they fail? And you need to really get a good understanding, and you need to become your setup specialist. You need to really know your setup inside out. It compares to running your own business. assuming you want to sell a service or a product. Let's assume you want to become a SEO Google specialist. You need to know everything there is about Google. How do you rank? What are the key factors? You need to really dig into every little detail. Or you want to sell a product. Then you need to know everything there is about the specific product. You need to become really the specialist about what are you trying to sell. You need to know every detail, every information, and you need to become the specialist. And the same applies to trading as well. The patterns, the setups could be considered your product, and you need to know really everything there is about a setup. So it is time to open your eyes for setup variation. That is so important, and it will just help you to deal and close the gap between reality and expectations of trading and price action. So very often the price after your entry, it doesn't go into your favor right away, but there's a chance that the market is just going to keep ranging, and you need to be ready for that. And one of the great things is that once you have learned 20, 30, 40 different variations of what can happen, and once you've seen 50, 100 different chart examples, you will be ready for your live trading. But if you don't know what to expect and you only think that after an entry the price goes in your favor and you only expect that, obviously this is going to be a shock once you realize this actually never happens. But once you are really ready and once you understand that the market often just goes sideways, or there are so many different things that actually the market can do, you will be ready for whatever the market throws at you. Sometimes the market makes a very deep pullback. That's not very uncommon. And this means that, first of all, you need to be ready with your stop loss placement. Don't put your stop loss too close. And also, if you're in a breakout trade and the market goes against you, then you're not surprised. And this is something that we are trying to instill in our traders. When the traders come to our mentoring program, we are really opening their eyes for everything that could happen. And you will see that after a few months, they get super confident in their trading because suddenly they're not surprised. They know what is likely to happen, what has the market done in the past. And then they realize, oh, this happened before. I've seen this 20, 30 times, so no big deal. Or the price will just sometimes take off too fast and there's no way that you can catch it. Happens as well. And that's totally fine. You don't chase. You will realize that, okay, this happens from time to time. It's not always the case. The next trade will come around. So I'm not emotional about that. Or you will see that fake outs occur. You will see that the market is often faking out a previous support level. And you're ready for that. You know that you just don't chase markets. You know that you have a rule for you only trade when the market is fully closing outside of a range. So you have little concepts, you have little tools and ways on how you can deal with those imperfections of price action. Or sometimes the market immediately pulls back. You get into a great breakout out of a triple top, but the market pulls back and then it turns around in your favor. How do you deal with that? And once you have found maybe 10, maybe 20 different variations of the setup that you trade, you can create your rules. You can create rules on how do you manage your trades, what do you do with your stop loss, what do you do in specific situations, and then you're ready. You are fully prepared to whatever happens, and this is such a big difference in how I see amateur traders approach their trading. Amateurs are often clueless and they are so scared in a trade because they haven't done this work, and then whatever the market does, which is not 100% in line with their perfect textbook trading scenario, they have no idea what they should be doing, and then they lose their heads, they do something wrong, they act impulsively, and then even though their analysis may have been correct in the direction, they end up losing money. And obviously this is super frustrating. Again, the trade would have worked out, but is this likely that you are ready for that? Our traders will be ready for that, and our traders will know how to deal with that because we have opened their eyes for all of the different variations. But if you haven't done the groundwork, then this will be probably very challenging, and you'll just see, oh, a big red candle, that looks very scary. What should you be doing? How do you react? Do you scale out? Do you close partially? Do you move your stop loss? What are you going to do? And you need to really make sure that you have done the work and you have a catalog on your desktop computer, put a folder there and throw in 50, 100 different variations. Do it on the weekend, block out 3, 4, 5 hours over a few days and really backtest the different setups and save different variations. And then put it in a doc file, in Word, Evernote, whatever, print it out and write detailed trading plans and rules. So very often the traders see that and everything looks great. You have a great triple top, the support is great, the price to trade would have worked out, but maybe you didn't take it, you missed it, and then you see, something is building here again. Let me trade it exactly the same way. But what happens? The market is giving you a less than optimal trading situation. And if you are expecting only that going forward, you will not be ready for this huge move. But this is just a common pullback. It happens very, very common after a flag, a breakout occurs and a retest happens is very common. Many traders will not be able to make money, even though the analysis seem to be right. They will not make money because such pullbacks are hard to trade if you're not ready. And then the traders will dismiss this move. The traders will dismiss that the market is giving here another divergence, moving into the previous resistance. And then obviously they're going to miss this because they think, the price in the past, it threw me around. Maybe they get a little bit personal with the British pound US dollar and then they avoid it. I've been there, I've done that. And then you miss this. Very, very common as well. So I can't stress this enough that open your eyes for setup variations and also make sure that you understand all of the other parts of the 6 key principles. And again, if you want to learn more, there's a link in the video description, my 4 trading courses for the price of 1, or if you would like me to mentor you, we have a Forex premium mentoring program as well. All the links, all the info in the video description. Until then, see you next time.